Good morning to you viewers and Happy New Year. Welcome to the Islamic Finance Weekly, where we capture the activities in the non-interest finance market. It is a brand new year of 2022, a year of hope and prosperity. 2021 marked a crucial period for Africa's largest economy. After the hampering effect of the pandemic, it needed a speedy economic recovery. Looking at the role of Islamic finance from an economic perspective, it has played a critical role in infrastructure financing, funding for health, education, and sustainable development, which has brought significant impact for nations that adopted it. Nigeria, Africa's frontier economy, is currently touted as the potential hub for Islamic finance on the continent. The question is, how can the non-interest finance strengthen Nigeria's fragile economy? Today, the focus of our conversation will be on non-interest finance and Nigeria's sustained economic recovery in 2022. This is our first episode of the program this new year, 2022. If you are watching Islamic Finance Weekly for the first time, it is the show that captures the activities in the non-interest finance market and how it can serve as a veritable tool for economic development. Right now, we'll go on a short break, and when we return, we'll continue the conversation.
Islamic finance has been misunderstood by many to be a religious product aimed at only Muslims. But that is not the case. Since the 2008 global financial crisis, Islamic finance has become an attractive segment of the financial market, promoting sustainable development and economic empowerment. Join me every Friday on the Islamic Finance Weekly at 11 a.m. West African time as we discuss Connect the Globe on Islamic finance and its benefits. It features experts, scholars, analysts, policymakers, and regulators who provide insight on the capital market, banking, personal finance, Islamic insurance, financial literacy, waqf, halal, and all other aspects of finance and the economy. You don't want to miss it.
Welcome back. The focus of today's episode is still on non-interest finance and Nigeria's sustained economic recovery in 2022. Joining me this morning to shed more light on it is Mr. Ndako Mijindadi, Head Investment and Research at Lotus Capital Limited. Good morning, Mr. Ndako. Happy New Year.
Morning, Bukola. How are you doing?
I'm fine. I hope you had a great holiday.
Fantastic. And you?
Same here. It is nice having you on the program this morning.
Always a pleasure.
The Omicron variant towards the close of 2021 have brought new concerns of disruption to the global market. How will you assess the non-interest finance market in the previous year at the global and national level?
I mean, it's very interesting that just when we started getting ourselves to living with COVID, you begin to hear about new variants of COVID. But what I can say is that our market is one of resilience. Regardless of the pandemic, we have seen a lot of institutions and the industry at large actually continue to grow. Globally, we've seen a lot of development coming out of the GCC. We've also seen developments coming out of Saudi Arabia, be it in terms of instrument issuances or even the development of Islamic pension assets. Now, if we look at Nigeria as a case in point, in 2020 into 2021, if I start with my industry, which is the asset management segment of the market, we saw growth in assets under management. We saw an increase in the number of asset management firms operating non-interest finance products. And part of this was because of the pandemic. With the pandemic, you do get an increase in savings for some people because obviously they're not moving around or traveling as much as they used to. And that helps to aggregate capital that can be used for significant development. If we look at the banking space, also dear to our hearts, we have additional financial institutions in the banking space. Sometimes around July, we had Lotus Bank, coming to the market as a full-fledged bank, the third full-fledged bank, in addition to others. So we're looking at about, what, 5 non-interest banks now. We also have Takaful companies that are doing quite well. One of the prominent Takaful operators also paid a surplus distribution in the course of this year, marking the level of profitability that it had generated. And then if you go outside banking, asset management, and even insurance, and look at Sukuk market, the Sukuk market also did quite well, if I might say so myself, this year. We had a broad range of Sukuk issuances. We had issuances by corporates. We had issuances by government agencies on the private level. And we also had, towards the end of the year, the 4th FGN Sukuk, which was quite successful. I'm sure we can speak about that as we go along. So it's been a very interesting year, despite the pandemic. I believe that going forward, it will continue to be a very strong performance that we'll see from Islamic finance.
I believe so too. Amidst the issue, the Islamic finance industry attracts new players through the products and services across the globe. Thank you very much for sharing your perspective with us. So from the fiscal standpoint, there is a lot of debate about the stability of Nigeria's economy. Do you think the current 38 trillion naira debt profile of the nation is sustainable? What are your thoughts here?
If we look at our debt to GDP ratio, which say our debt level at about 21% of GDP, is not too bad when you compare that to the World Bank's recommended debt sustainability ratio of 55%. And I mean, it's if you look at the DMO, for instance, you'd even say that the DMO having a limit of somewhere around 25%, our 22% is not so bad. But that's looking at one metric, right? If we listen or look at the other numbers that came out from early on last year on our debt service to revenue ratio, that's looking somewhere around 98%. It is some level of concern. If you ask me though, I think aside the level of debt, what we truly have, as many others would say, is a revenue problem. A revenue problem in the sense that if we had a larger revenue base, we would be able to cover our debt service costs. And then we wouldn't be complaining about a debt service cost to revenue ratio of something around 98%. I am quite happy that there's a lot of work being done to try and improve this revenue base, at least on the federal level, through the National Development Plan, the one for 2021 to 2025. And the hope is that through this, we should hopefully see a revenue to GDP ratio going as high as 15% from about 8% that it is now. So hopefully by 2025, if they get things right, we should be having a higher revenue to GDP ratio. And this is largely going to come from building an environment or an economic environment where tax revenue can be generated to create a sustainable base for the country. So yes, the debt service ratio is a concern, but there are things that can be done easily to improve the economy and improve our revenue base and make this debt level not much of a concern.
Well, according to the president, the debt level of the federal government of Nigeria are targeted at specific strategic projects. Are they really targeted at specific strategic projects?
If you look at the general debt profile, I mean, obviously debt, some of the debt is also used to service existing debt. Some debt is used to cover overheads of government and salaries. I have a view, though, that some overheads are still related to areas that can provide societal benefit. So it's not like all overheads are not good. Using monies to pay salaries is also very important for economic development, because many of the civil servants as well, if they're in productive areas, they would be providing some social good as well. So paying them adds to economic activity. So I am not really against utilizing monies to pay recurrent expenditures, be them overheads or salaries, as long as the instrument of government is productive, right? As long as the instrument of government is productive, then get a fair wage for your work. Are there projects that are tied to the debt, not all the time. But for non-interest or Islamic finance, nature of finance, and the one that we have used in Nigeria, they are project tied. So they have a very stronger business case in the sense that we can see tangible projects that have been delivered. We can measure the amount of employment or economic activities that they can enable just by virtue of their location and their significance to the country. And in fact, in the selection of the projects that go into the federal Sukuk issuances, their economic priority is part of how they are selected. So it's not random projects going to nowhere, that you find under the Sukuk. You find economically viable or significant and strategic projects being utilized for Sukuk. So it's another selling point for Islamic finance, definitely. But for government, not all projects are tied. Not all debt is tied to project.
Oh, okay, thank you, Mr. Ndako. Okay, so let's look at Sukuk bonds in the country. Nigeria has issued over 3 Sukuk to finance its road rehabilitation and infrastructure renewal projects. What are the challenges that investors are facing participating in Sukuk issuance? Is it easy to sell Sukuk in the secondary market?
Good question. I like to look at our market, maybe not specifically from the point of view of challenges. I also like to look at opportunities, because they go hand in hand, right? So yes, if we say there are challenges, or if we were to find any challenges in our market, I'll say that maybe there's not enough Sukuk. We've been, how many years? 2013 to 2017, there was a lull, and then from 2017 till now, we had 4. And they've been highly oversubscribed. Now, that level of oversubscription shows that there's appetite, and there's clearly not enough, right? So if you were to ask me a challenge, I'll say we just need more of the issuances. Second thing is for liquidity, to your question. There are many things that affect liquidity in the market or improve liquidity in the market. One of those things is the number of participants. Now, if you have issuances where some people do not participate either because the tenor is very long, case in point at the last Sukuk, maybe 10 years, 7 years, then you'd get very few institutions or not a very large number of participants, and then you can start having liquidity issues. But if you were to have issuances, multiple issuances with different tenors, with different levels of return profiles, different terms, then you'd have more people participating in each of these individual instruments, and you have more liquidity happening in the market. Now, I see this as something that can come. It will build. Our market is evolving and growing very rapidly. So any challenges that might be perceived in the beginning around liquidity are challenges that will easily be surmounted.
All right, the Sukuk market has proven usefulness as a source of capital to private and public entities, even the Islamic and non-Islamic countries. So, looking at the performance of mutual funds in Nigeria, can you give us a sense of how well the Halal Equity Index performed in 2021 in comparison with the All-Share Index? What are the prospects in 2022?
So for the equities market, it was also an interesting year in 2001. Interestingly, the first half of the year wasn't so great. We had the market come down. And then most of the gains that we see being reported now were actually reported towards the second half of the year. So in the first half of the year, the broad market, and that's the all-share index, was down by about 5.8% by half year, right? At that time, the Islamic index, the NGX Lotus Islamic index, was down by just about 3%. So a bit more resilient than the broad market by half year. Now, we rebalanced that index by mid-year. 2 stocks came out, Cadbury came out, CAP came out, and then there were other stocks that came in. I think Presco and Ndako were 2 stocks that came in based on our rebalancing exercise. By the third quarter of 2021, the Islamic index was back in positive territory, was up by about 2%. At that time, the broad market index was still negative. Now, at the end of the year, when we started having a lot of portfolio rebalancing, and market activity picking up, the Islamic index finished at about 5.74%. Now, this will be the second consecutive year of it recording gains. And we think a lot of this activity is going to continue in 2022. Some of the major drivers of activity in the index, or at least in the Islamic component of it, is the telecommunications market. We've seen very good performance from companies such as MTN. We've also seen good performance in the industrial goods segment, with the amount of spending that should happen for capital expenditure. At least we should see good performance for industrial goods, for consumer goods as well, as the economy expands, as the economy recovers in 2022 further from this year. We should see a good improvement in consumer goods as well. Now, consumer goods, telecommunications, industrial goods, significant components of the NGX Islamic Index, and we believe that this is going to drive performance going forward.
All right, I believe the market will continue consolidate ahead due to investors' confidence in the market, particularly the ethical investment. So what would constitute success for Islamic finance and investment in Nigeria?
For me, I actually consider the Islamic finance market to be a success already. And I'll say why. Right, so even if you look at the conventional markets, whether it's the capital market, whether it's insurance, whether it's the banking industry, the regulatory environment is not static, it's evolving, right? In the equities market, you have cycles, you have periods of companies listing and delisting, and things like that. So these are natural things that happen in a functional market, right? Look at the money market. So the money market, we've seen changes in the yields on treasury bills. We've seen differences in participation in the OMO market. So it's an evolving space, same as the Islamic finance space. So right now, we have an industry that is robust in terms of regulations for banking, insurance, capital markets, pensions, even microfinance, right? You have robust regulations to cover all these things. We have participation from retail, institutional, government, subnationals. You have instruments listed on all the exchanges, right? Most of the exchanges rather. You will have capacity development programs, which is a very significant development engine to ensure that an industry is sustainable. So you have masters and PhD programs in various universities, federal universities, to support Islamic finance. We have platforms such as yours that are supporting this industry. So, does this not look like success, or at least the makings of success to you, right? Is there more that we can achieve? Of course, there is more that we can achieve. But honestly, I believe we've come a very long way, and we shouldn't lose sight of all that we have already gained in this market. We should consolidate on those gains as we keep on growing.
Yes, there is more to achieve, and for Nigeria to achieve its full potential, so they need to embrace its principles for the benefit of individuals and national benefit. So going to my last question here, according to S&P forecast, the global Islamic finance industry will grow by 10 to 12% annually over the course of 2021 and 2022. So what are the key trends that will shape the non-interest finance market in Nigeria?
So I think our Sukuk market will be a key driver in Nigeria.
Why only Sukuk in Islamic finance?
It's important to understand why Sukuk. Now, globally, Sukuk is a very powerful tool, even in the major clients for industry in Islamic finance. Now, when we say Sukuk, there are different types of Sukuk. So I might say Sukuk, it doesn't mean that it's a sovereign Sukuk. It can be a corporate Sukuk. It can be an Ijara Sukuk, a Murabaha Sukuk, a Mushara. There's so many types of Sukuk. They all fall under the umbrella of Sukuk. They may be fixed, variable, whatever, right? But that is a financial instrument that is very flexible if properly applied by different potential issuers, right? So when we say Sukuk, we don't necessarily mean just one Sukuk. We mean all Sukuk in its various forms, right? So I think Sukuk will be a significant driver. And then it's also important to understand how a market is structured. Now, most of the time, the fixed income market takes a significant chunk of a financial of the capital market, and that's because you naturally have a lot of investors whose investment appetite sits well within the fixed income, right? So, if we were to say who is the largest issuing entity in the conventional space in Nigeria, it would still be the federal government, right? Right. What we don't have in our market, at least in the Islamic finance space, we don't have the frequency, or at least the clarity around the frequency of issuances that you have in the conventional space. So we don't have, for instance, a Sukuk issuance calendar in our market. So having things like this will be very significant drivers for growth. It will do a number of things. It would allow people to plan just how they want to participate in the market, when to make liquidity available. These are very important decisions for investors. So clearly, yes, Sukuk will be a key driver. I expect that we would see, not just on the sovereign side, but multiple issuances, either from the subnational side as well as the corporate side, because of the appeal that this instrument has generated. Right. I also expect to see a lot more product innovation, particularly around the banking space. And this is because the adoption of technology in distributing financial products, in even improving financial intermediation is becoming, I'll say, very critical. So there is scope within Islamic finance space to adopt Islamic fintech solutions as well. So we expect to see that drive industry participation, increase the number of participants, and the size of assets in the market. I also believe that in the formal asset management space, we would see an increase in assets under management, and that will largely be driven by increased awareness, by increased comfort that people have through the formal investment community. So we hope to see all that growth playing out.
I believe the Nigerian non-interest finance market will continue to witness significant growth as long as there is awareness, discussions, and consideration as a source of financing, infrastructure, and development continues. Thank you very much.
You're great.
Thank you very much, Mr. Ndako. You are our first guest for this year, 2022. Thank you so much.
I'm especially honored. Thank you very much.
Right. Do have a great day.
Thank you.
All right.
Bye.
Bye. Indeed, since the introduction of Islamic finance, also known as non-interest finance in Nigeria, has made tremendous contributions to the development of the Nigerian economy in areas such as financial inclusion and infrastructure development. And that will be all for this edition of Islamic Finance Weekly. Connect with us on our social media platform displaying on the screen. Watch the Islamic Finance Weekly videos on Web TV banking channel and read more news on our website www.kosherng.com. Thank you for watching. Stay blessed and have a lovely weekend.